a life of entrepreneurial freedom with insights from successful creatives, entrepreneurs, and investors. Discover how they overcame challenges and turned their biggest dreams into reality. They share their personal success playbook so you can build the business and life you truly want. Welcome to Passion Millionaire, the podcast by Robert Roth. Rock and roll your dreams.
Welcome to this next podcast episode, Passion Millionaire. I'm super excited today to have Alex Medana here, who is a multi-entrepreneur, serial entrepreneur. He has raised millions of dollars in capital for his projects before, has exited a company successfully, and he's not stoppable. He's already on his way with his next company. And hey, that's going to be a very inspiring episode. I'm already 100% convinced about that. So therefore, I'd like to welcome Alex Medana. Great you're here.
Hey, thank you. I would like to talk to the guy you just introduced. He seems to be interested. Interesting profile.
Yeah, it's actually kind of crazy. You mentioned it like 2 years ago. We were meeting through a contact that we both have, and we had an exciting talk back then. And now we're sitting here in the podcast interview. So I have memories with a lot of crazy stories he told back then.
Okay.
So I'm super curious what we're gonna find out now. But it's gonna be exciting. So Alex, maybe let's start like this. Give us an idea, in your own words, like who are you? And what are you all about?
So what you see is what you get. That's me. There is no agenda. I really don't care about how you see me or how you perceive me, but it took me a few years, right? So I will be 54 at the end of this year. So it took me a while to, I wouldn't say destroy the ego, because you never do. It's really to be humble about whatever you've done and what you haven't done, right? So either way, and what you see is what you get from me. So that's number one. There's no agenda. I like to help people. So the fact that I like to pay it forward. I've been advising, mentoring, coaching people for the last, 10, 15 years when I was in bank. Have you heard of that bank? It's called the German bank, Do you know the German bank? Deutsche Bank?
Yeah, Deutsche Bank. Yeah,
I had large teams, and that's where I started to become a manager and then later a leader. But in terms of professional, I'm a fintech entrepreneur, 25 years of experience, 16 years in banking, 10 years in blockchain, set up a couple of companies. I looked at maybe having conversation with setting up maybe another 10 or 11 that went nowhere. So we can talk about that if you're interested. And I'm about to start another one. And that's what I'm passionate about. It's building stuff with great people that I can learn from. That's it.
That's it. Yeah, I'm super, super excited about that. So one question that is burning is like, when you look back through all the ventures that you have done, what would you say was maybe a turning point that you had where there maybe was something that did not work at all, and then you learned something, you figured something out, and you probably started doing things differently, and you were kind of pointed more into a successful route, no matter if that happened immediately or later on?
Yeah, so that's an interesting question. So first of all, when you look back, you have to understand that it's not the truth, right? It's the way you select the good, the bad, and ugly of your past to say, either to build yourself up, like, oh, I'm so great, or to beat yourself up, which is, I didn't succeed, I'm an idiot and whatever. So either way, for me, the past is past. I never dwell. I move forward. But looking back, I made ton of mistakes, right? So I started being in blockchain in 2015, way before smart contracts in 2017. That was my first company, building the idea of those things are very important for the future of financial services, for banking, whatever you want to call within banking. And I spend a lot about my time educating others, which now I'm very straight. And I said, Robert, we work together on this project. I'm not here to teach you anything. I can point in the direction of what you need to learn, but look, rely on me for knowing what we talk about, and you learn as much as I will learn from you because you're an expert in X, Y, and Z. So not educating anymore because it's a waste of time, waste of money. Second is to be very, very focused on one thing. And we were very early. So we started with having the idea of changing the world, right? So, you become an entrepreneur because you want to cure cancer. You have big ideas, a big vision. And then
what was the project you were working on
so
back
it's
then?
really democratizing finance. So we had it was called FinFabric, and we had really a retail equity brokerage back in 2016, 2017. 2017, 2018, we had a cryptocurrency trading platform, which it's another mistake. We should have kept it and stay in crypto because we came from capital markets, so we understood and still understand connectivity, order book, risk management, compliance, blah, 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 blah. But we pivoted because it was the winter, if you remember, end of 2018, the first crypto winter. And then we pivoted in 2019 and we built I had that vision that private markets are the new public market, which I'm sorry to say, but I'm right. But I can't prove I'm right other than if you Google and you see, he was talking about that years ago. And yes, he's right to a certain level, but he can't show what he did in that space. So we were building a private marketplace for private equity and private debt and really to democratize finance, right? So that was that. And that was the acquisition where we sold. But, and another mistake was nobody cares about technology, right? So we were very proud of our backend, but when we showed our user experience, UI, UX, it was come back to us when you have a product. But hold on, we have a product. It works because we have connectivity, we have API, we have this, we have keys management, all of that. But what you see is what you get. So if you don't see a product, it doesn't exist for you, right? Because let's say a decision maker is not the technologist. A decision maker is a CEO, a COO, a business person. So they want to touch, feel, and see something. And we were so happy with our backend. So right now I'm about to start another company. There will be an infra, but I'm spending a fair amount of time of thinking about what I can show you. And as well, telling you the story, it's an MVP, it's not perfect, but this is the roadmap and this is what we're going to build. So as well.
So basically, I'm cutting in real quick, but I want to point out one more thing a little more. Like basically, we're talking about how to, if somebody wants to start a company, like a startup type of company, and you need to raise funds. That's what you're talking about right now. And that's where there's potentially a lot of learnings for those type of people, like how to raise funds. And there are general principles, and also would you see, is there a difference if you want to raise smaller amounts of funds? Let's say maybe what is a smaller amount of funds? I'll let you define that, or bigger amounts of funds. Maybe it could be less than $1 million or more than $1 million, multiple millions. And what would be maybe differences or learnings? I remember you have mentioned something also before we started the recording. So
I've raised
anything about those type of fundraising that would be super interesting, I think, to learn.
So, and by the way, I'm French. I'm a Hong Kong PR. So I built my career in France, London, Bangalore for a couple of years, and 10 years of Hong Kong, right? So, and I'm a co-founder of the Fintech Association in Hong Kong, which is something I'm very proud of. But that on one side, what is very interesting, and I will do it differently today. But what I wouldn't do differently is to how you position yourself. And it starts with the belief that you're onto something. So the problem needs to be big enough, right? You have to be able to measure it, which is the TAM, SAM, SUM, right? So TAM is the big market. It's worth 10 billion, 1 trillion.
Like total addressable market.
Yeah, but it's not what you are addressing right now, maybe in the next 5 years. But what you're addressing, sorry, is the serviceable, obtainable market, the SOM, which is what can you do today with an MVP, with a product that is working, right? So that's number one. It comes as well, the valuation. You start a valuation, you start with a price point. And the price point define the next round. So there is how much you need, how much you raise at. So let's start with how much you raise at. Based on who you are, the team, if today I raise and I set up a company, it's not going to be $5 million, the value of the enterprise company, because I have 25 years of experience and my team would have, dozens of years, 20 years plus of experience, right? So that's number one. And I'm a repeat entrepreneur, which means there is some cream on top, right? So there's a premium for that because it shows that I kind of know what I'm talking about, even if there's a lot of uncertainty. So let's say you position yourself. To give you an example, when we positioned ourselves in August 2016 in Hong Kong, I went around and I said, the value of what we had, and we had maybe 90% of a retail equity brokerage platform, online platform, right? 90%. Most of the backend and very little user experience. And I said it's worth 15 million. So some people laugh at me. Some people said, but it's okay. What you are looking for is information. Feedback that says, well, it's not good. It's not a good feedback because I cannot action. So if you tell me 10 million, I will say, hey, Robert, why you say 10 million? Because there's equivalent and all of that. And so that's information for me. The first round we raised, it was around the 10 million mark. So you might argue that some people were right, but I was wrong. But I tried. Yeah.
So that $10 million, that was
valuation.
capital that has been actually raised.
No.
So you raised
the valuation
that amount?
of the
No?
company.
Okay.
We raised
The valuation.
I think the first round we raised shy of $1 million. So 10%.
And how much equity did you give up? 10%. Okay. So you raised 1 million then, basically, in cash.
So roughly 10%. What you have as well, this now about the amount you need. The way I look at it, which is a little bit crazy, is how much can I survive without revenue? Of course, you don't tell the investors that you're not going to make money. You want to make money and get to revenue very, very quickly. That's your job, right? But to manage your treasury and your cash flow, you have to think, okay, is it a 2 years? Is it 36 months? Why? Because most of people, they raise with a view that they will get revenue very quickly. And it never happens, especially if you work with banks, institutions, insurance company. They have their own times, which slows you down. So think about the amount you need. So let's say, for argument's sake, your team of 15 people costs you 2 million. Well, if you raise 2 million, I'm doing quick, easy math, right? You raise 2 million, you'll survive 12 months. Is that a risk you're able to take with what you know today? It's a yes or no. And then in my example, so you go out and you start with friends, family. So friends, family, business angels, people you know, whether they are institutional investors, they know you. And you have to be aware that the more small investors you have at the beginning, it might create problem later. So in my argument, the value is 10 million. We raised 2, right? So roughly say 10%. 20%.
So it's 20% in this case.
I'm not thinking. I'm thinking about the next sentence. So that's why. And I'm rubbish at that. But
all good.
Let's say we have 10, 15 investors plus 3, 4 founders, right? Then you want to raise in 12 months, which means very quickly you have to start raising. As the CEO, you're always raising. So let's assume you want 5 million, 10 million. The institutions that will come in, most likely VCs, risk capital, they would say, I don't want all these small guys. I want you, Alex, to get rid of all these small investors because, I want to be the lead investor on that Series A, and I want you to have this conversation. And so I go back to Robert and I say, hey, we are friends. We've known each other. Thank you for your 100,000, 50,000, whatever you gave me, but I need to exit you. And so we would have difficult conversation because you think I breached your trust. Then we need to agree a price point which might be forced upon by the institution coming. And therefore, with all of that topic, the most important raise is the first one. If you can have an anchor lead investor, whether it's a family office, whether it's an institution, that give you most of what you need at the beginning to survive enough so that you can scale up, that's the best scenario. And then it's about trade-off on what you believe and know, what you can achieve, what is feasible to achieve. And it's give and take. To me, it's an art. If you talk to people in Silicon Valley and all VCs, there's millions of VCs, they will say, Alex, you're wrong. It's a science. And I dispute that because, you can have 5 conversations with 5 different VCs of type of investors. They will tell you 5 different things. And especially if you're pre-revenue, which is based on the team, the idea, the opportunity, the time, sum, technology, the MVP, and the ability to deliver on that, all of that. So I've tried to answer your question in a way that is very practical for people listening to your podcast.
Yeah, 100%. Wow. Thanks for all of those insights. And I think what could be interesting also is like when you look back to a project where you have raised capital and then moved forward, and then how did that develop? Like, especially maybe, you can decide, but maybe that project where you have exited the company could be an interesting example also. Like, how does that go until you actually exit the company then?
So that's
like the development of the whole startup story, so to speak.
And by the way, full disclaimer, my story may not be relevant for your auditors, your listeners, because it was in the middle of COVID. So what I believe, by the way, I believe a lot in serendipity, right? So and we don't have enough time to talk about my life and all of that, but my life is about, there's luck and I'm gonna grab it. So it's to be available
Good way
for the
to say it.
luck to not only come, but for you to identify it and grab it and run with it, no matter what. So in the beginning of COVID, 2020, we were in Hong Kong, so we saw it first time, right? First in the world. We were near China, right? It's part of China. And we were raising 8 million at $32 million pre-valuation. We didn't have paying customer because we pivoted and we spent the whole of 2019 to build that permissioned private marketplace, on 2 types of blockchain, and then we
That's US dollar or
US.
Hong
No,
Kong
US.
dollar?
Yes. I only speak.
Yeah.
So I'm French, by the way, and I left in 2002. So I don't understand euros. I understand pound, Hong Kong dollar, US dollar. Euros, I can't. I don't know what is €1. Anyway, so I only speak in business in US dollar because then it's a convention. So we were raising that, and we had close to 2 term sheets, and then late January, so we had Chinese New Year, where for 1 week at least, nothing happens. People go, and usually it starts again. So I remember it was end of January, and I thought, and I spent 10 years in Hong Kong. This time, Chinese New Year we get rid of it very quickly, and February, we go. And then prospect investors when, I'm busy next week. I don't think it's the right time. And we started to hear news from China, in December, January. And so to cut a long story short, the raise we couldn't raise. Because if I had raised, I would not have exited. I would have stayed in Hong Kong. And now we would be on multiples of what we sold it for. So we had to find an exit. And the exit came into um, conversation. The thing is, because of COVID, we couldn't complete our Series A. As I mentioned, 8 million at 32 pre. And very quickly, we had to realign and tell the team, we might not be able to pay you. We might not be able to continue as a going concern because the clients, the prospect, the investors are not coming, right? There's nobody answering. And then so we had a project coming to us, and the project became, from consulting to building to being acquired. And that was to build a marketplace, so using our technology for physical oil trading. I stayed
Oh,
2 months.
wow.
I stayed 2 months as the CEO. It was a Vancouver on the Toronto Stock Exchange venture, on the venture side of the stock exchange. And I stayed 2 months as a CEO because I had relocated to the UK for my daughter's education and other things. And being a CEO of a listed company that is not worth $1 billion or $500 million, it's pointless because you spend your time doing, PR and management reports, and I'm a builder, That's why I like startup. I like the 0 to 1. I like to build. I like to lead and help people in a team develop, their opportunities and have the best outcome for them to learn and be. It might sound fluffy, but to be happy and to deliver at their best. And that's what motivates me as a human. Is I'm not a teacher, but I'm a support member that wants everybody to give their best shot, and I'm here. What is interesting, sorry, just in the sports world, what is interesting is that if you win as the coach, you can't be at the forefront. It's a team sport. But if you lose, the coach is the first one to be in front of the microphone and take the hit. And I learned that being a manager, leader, whatever, in banking, where when something happened, it's your responsibility, not your team that made a problem, had an issue. It's your responsibility. And so to take that responsibility and to nurture a safe environment for a team to develop themselves, that's what fascinates me, human to human connections.
I find that very interesting. I can relate to that a lot myself personally also.
Okay.
And one more thing that you just said that I find super interesting also is like that there are those different stages. Like if you start a startup, you raise funds, you bring it to a certain point, and then that's at least what I heard from you. So I interpret that. And then there's maybe other people taking over from that point once you have created the basis of the working company. Did I hear that right? And maybe you want to elaborate a little bit on that, because if it's different people building it to that stage and then different people taking it over, so what are the differences?
So first of all, as an entrepreneur, you have to grieve, right? Don't forget your identity is whatever your role, right? So let's say you're chief commercial officer, CEO, whatever, CEO, whatever the title. You're a founder. So you're the guy or the lady who took the most risk, who went through the most pain, the most stress. There were a time where we had 1 week before payroll and people look at me, and they said, wow, I think we're not going to be able to make payroll. And I'm thinking, no, what? It's going to happen. And then magically there's a client coming, there's a check, we make payroll. So that's stress, right? And then you sell it.
Right.
You sell it and some of the team stays, but other people are involved. And so you grieve for the loss of the baby you created because it's your idea, your vision, the team that you used to work together. You're not going to see them ever again, or not in the same context, in an office or as a group of people. You may remain friends, but, when you move time zones and life takes over, sometimes you don't talk to one another for months or years. And that's okay, right? There's life. There's no It's no good or bad. That's what it is. And then you have to move on. And you have to move on
Mhm.
quite quickly. So for me, it took me a couple of weeks where actually, when we were signing the documents to sell, that was like,
Mhm.
don't forget it was during COVID. So we were forced kind of selling because otherwise we would have died, right? As a company.
Mhm.
There were no investors. Clients were not ready to come to the party. So that was the best
Mhm.
opportunity and option at the time. And you have to say, look, the way I look at it, so when I was 18, 19 years old, years ago,
Mhm.
I read a lot of books,
Mhm.
philosophy, quantum physics. And in quantum physics is that, there's parallel universe. In that
Mhm.
universe, we had to sell. But maybe in other universe, first of all, we never met, we never did it. But in others, we were very successful
Mhm.
and happily ever after.
Yep.
So when you position in that universe, this the only universe you say, hey, let's move on. But it takes a while.
Yeah.
It took me a couple of weeks. And then you talk,
Mhm.
you write. I wrote about it. I love writing. I love expressing
Mhm.
myself. But you have to move on. And
Yep.
circle of life, right? That's what it is.
Yeah. Very, very interesting. And what type of buyer did you find then?
A buyer that had the capital that was interested to use that platform for physical oil, a total industry, but not very
Mhm.
aligned with my vision and the product. So I'll 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 say, I just stay there because it's the past and it's five
Mhm.
6 years ago. So what you see today is not the result of that endeavor fully,
Yep.
just partly, and it's a very small portion of who I am today. I've moved on.
Well,
Um,
understand. Interesting. So basically, it still exists. It's running, but it looks completely different from what you
uh,
intended to build or what you had built
yeah,
to this
no idea.
point. And yeah.
No idea
Okay.
what if it's still alive. I mean, there's a website,
Ah.
and
Yep.
it's you can't live in the past, which I said at the very beginning of our
Mhm.
conversation, because otherwise, you stress about what if, when, could, should, would, and you
Right.
beat yourself up. I have no time for beating myself up. No time.
Just doesn't make
No,
sense. Right.
no,
Agree. 100%.
no, no, no. So,
Yep. And right now, like you're working on something, and is there something that you would like to share also about it, or is it all secret?
look, I don't believe in secrets because one, I'm not that intelligent, and whatever I thought about, no, really, whatever I thought about, if my ego tells me I'm the first one in the world, it's a lie. Second, even if it's true, I'm the first one. In the next split second, somebody would have thought about the same thing. It's
Mhm.
a curve, a distribution curve of people, right? So in the 8 billion of humans, there's just one that looks like me, speaks like me, who has two colors eye, but we thought about the same thing. Most likely, there's more than one. So there's one.
Mhm.
Second, I've been 10 years in blockchain, right? So I've been, there's not an asset class I haven't thought about. I was talking actually what we call a tokenization. And you can look, it's all on
Mhm.
LinkedIn, September 2015. There's a post, and I call it the future of capital markets, where it's bits of things. And it comes
Yep.
where I had a conversation with somebody who said, and I said to them, I said, let's say you owe me $500 for that hour of consulting, but pay me in electricity. And I receive electricity in my portfolio, and I can use that to buy, I don't know, gold, cocoa, real estate. And that's been my
Uh-huh.
vision since then. So
Okay.
we talk about tokenization. That will be a long story short, but the time is now because the first real use case at scale, it's stable coins. And there's a couple of things
Mhm.
that went boom, which is
What problem does it solve also to understand that better?
so there's many problems. There's an acceleration, the velocity of capital, right? So capital is
Mhm.
trapped. within your treasury management, your workflows, your invoices, your investment, your portfolio. So think about the future where my future is I have a portfolio of assets. I have things
Mm-hmm.
that you want from me, and you have things that I need, and we can swap them. But the underpinning of that,
Electronically in this case then.
the underpinning, oh, you want money? I need to pay you money without friction. So the future for me is a frictionless connection of me to you based on a baseline of fungibility. And the best use case for that is stable coins, which is, we can think in dollars, we can think in basket of currency, or we can think in invoices, because where there is value that is converging with what we think is real or not between you and I, when we put value, in other words, when we put a value onto something, then there is, and I don't want to sound like a Trump, but there's a deal to be made. There is something.
Okay.
There's a transaction somewhere. And that is the
Right.
future. But where I'll start, and there's two things that went boom in my mind, is Stripe and then Walmart and Amazon going full out on stable coins, because stable coins is the first tokenization use case at scale. So, we can start with payments. I send it to you very quickly, but there are other ways, right? So telcos have built that since the 80s, particularly in Philippines and then in Africa, Western Africa. So we can do that. It adds,
So we're talking about a payment solution.
yeah, payment solution. So it doesn't add a lot of value, but it adds value in terms of building the infra. Okay, we can start thinking about FX, where we take out intermediaries. Again, there's a lot of solutions out there, open banking, cards, whatever. It's the next level. But these are the building blocks towards my world, which is exchange of value, acceleration of capital velocity, which is we have assets, liabilities, and somebody wants them or think there's value in them. And therefore, the baseline is that infrastructure, that stable coin infrastructure to accelerate everything. Right? There's a lot of work because there's no fungibility today. There's no, you can't go to Tether and say, I want $100 worth, give me 100 coins of that 100 Tether. It's pegged to dollar, but it doesn't exist. So there's a lot of work, and that's what I'm fascinated to work in.
Okay, interesting. And which stage is that venture in right now?
So it's at ideation. We are looking at maybe 3 or 4 use cases to start with. The vision is very clear, which is really connecting supply chain to investment world. So supply chain, velocity of capital within supply chain between, exporter, importer, distributor, SMEs, treasurer, all of that, right? And then the world I come from, which is, maybe marketplace of lending marketplaces, wealth management platform, brokerage firms, capital market houses. That's my vision. And I want to be part of that connecting. And maybe next week we have a conversation and I say, oh, by the way, this is this. So we're about to set up a company in the Middle East in the next few days, few weeks. And it's about telling the story. So I'll be more active on social media, on LinkedIn, right? And then getting feedback. Now, feedback is very important. You can't have emotion about, let's say, Robert says, Alex, you suck. So I can't be emotional about that. But I need to ask, why do you think I suck? The first response is, oh, no, but, I'm great. I know I'm an expert, blah, blah, blah. So, we reply with emotion. No, I need information, which is, Alex, you're wrong. Why am I wrong? Oh, I haven't seen that. Boom. And you take that information and you put that and you decide, is it something I need to deal with today in my product roadmap or later, or ignore because I know best in terms of where I see the opportunity. So it's a trade-off.
Makes sense, yeah. So sounds like another really big project actually that you are working on right now. So you're calling the future right now, basically, with what you're doing.
So I start
curious.
Yeah, I started being an entrepreneur in 2015 because I wanted to solve democratizing finance, which is two layers, right? One is SME financing, 5.2 trillion gaps. And then you and I, taxi drivers, we have $1,000 euros, but we can't have access to certain asset class because we are not financially literate. So these two, they correlate, they commingle, and that's what I wanted to do. Disclaimer, what I'm about to say sounds really rubbish, fluffy, but I will say it nevertheless because I believe in it. And I don't want to start another company. I want to start a movement, which is beyond a company. It's teams of teams. It's decentralized. It's the future, and it's a big thing. And if it's not big enough, it's not about me being a millionaire and successful and driving car. I've never driven a car in my life. I don't intend to do. I like cycling or running or walking, but that's a side comment. I want to change. I want to cure cancer, if that makes sense. That's the ego of an entrepreneur, where the problem has to be big enough so that I want to spend the next 5-10 years solving it.
Wow, that's very inspiring. And I'd be super curious, like, for the end of the podcast, if there was one thing that you could give as a message also to the ones, especially now that are interested in the startup space or are maybe right now working on a startup, what would be, if you only could give one advice or one learning or one impulse, what would be that impulse that you could give to
Only
those
one.
startup people right now?
Only one.
Only one. The number one.
Start today. All you need to do to know that you have today, you have it, you know it, you can do it, you have it. That doesn't mean it's 100%, but there is no limit to what you can do today. And it has to start ground zero. Like our conversation may be a start of beautiful something, whether directly with you or indirectly with some of your listeners. But I started today to talk about that journey. I have to. It's not like, oh, I will buy a computer in 18 months because, it's going to be cheaper. No, in 18 months, it's going to be the same price. Yeah, there will be more features, but it's in 18 months. I've lost 18 months today. Next Monday, I'm going to go to the gym. I'm going to start and I'm going to lift weight. No, today.
100% agree on that. Thanks so much, Alex, for this message. Thanks so much for this interview with so many learnings. And it's super inspiring what you have done and what you are doing right now. I really appreciate that. And if somebody wants to follow you, reach out to you, the best place would be LinkedIn, or is there any other place?
LinkedIn.
You can name it right now.
Otherwise,
LinkedIn?
Telegram, Signal, and all of that, there's too many. So LinkedIn is one.
Cool. We're going to make sure to link that also to the podcast so everybody can find you and follow.
Thank you.
Alex, thanks so much. Appreciate that.
I appreciate.
Go to rockandrollyourdreams.com/podcast.